go across to the management of Greenpanel because they are also joining us to talk to us about the earnings. The earnings, if I understand it right, were on the weaker side. Mr. Vishwanathan Venkatramani, the CFO at Greenpanel Industries, is joining us on the show. Thank you so much for joining us. To begin with, there was a weakness across the board. The EBITDA declined by 50% year on year. Margins have contracted very sharply in all of this because MDF volumes also fell 7%. Is this pressure likely to continue, or are you seeing some improvement in the overall demand metrics?
Yeah, the first quarter was a one-off, partly because the Uttarakhand MDF plant was closed for 19 days and that impacted the volumes. And we also saw a sharp increase in brand spend to 4% of revenues, which is likely to moderate to somewhere between 2 to 2.5% for the full year. So those factors will not be there from the second quarter. So we expect improved performance on both the fronts.
Fair enough, but what about the MDF volumes? In the sense of entire year, what sort of number are you expecting for volumes?
We did 5,000 cubic meters last year, so we are targeting 12 to 15% volume growth. Should take us somewhere around 5,65 to 5,75,000 cubic meters for the current year.
12 to 15% volume growth you're envisaging, and what will it do to your margin profile for the full year? Because I think in last year, that is FY23, your EBITDA margin was around 23% thereabouts, but it's fallen quite sharply, and analysts are penciling in that this year the number could be between 22 to 21%. Is that realistic?
No, we should be targeting EBITDA margins of around 23 to 25% for the MDF segment and about 8 to 10% for the plywood segment.
I just wanted to understand, Mr. Venkatramani, what the outlook is in terms of the company's plan to address the challenges largely on account of the higher MDF imports, the material delays, the cost escalation in order to ensure that you have smooth completion of your projects?
As far as the expansion plan is concerned, we are on track to start the production in Q2 next year. And we are not looking at any cost escalation as far as the capex cost is concerned. And demand is pretty good. So I think we are on track to achieve the guidance.
What about the competition from imports?
Yeah, we are introducing a new product which will help us to compete with imports. So it will be at a price point 8 to 10% below our basic industrial product. And that will help us to compete with imports.
Okay, fine. And how do you plan to capitalize on the pickup that we're seeing in the real estate market? Any strategies in place to leverage this opportunity effectively?
Yeah, so basically our strategy is to expand the dealer network, add another 400 dealers during the current year and the next year. And like I mentioned, we are introducing new products which will help us to target with the import segment. And we also plan to increase the mix of value-added products, which we achieved a mix of 54% of domestic volumes during the first quarter. And we are targeting to take that to 65% over the next 2 financial years.
The other two things that impacted your operational performance was A, higher advertisement costs that came in Q1, and the other was that the realizations both in terms of export as well as domestic realizations were on the lower side. Where do you see the pricing and the realizations move from here on, and will the ad spends continue at the current run rate?
Yeah, the export realizations have trended down because we took price cuts last year to compete with imports coming into the Middle East from Vietnam, Malaysia, and Thailand. So that impacted the export realizations. Domestic realizations have been stable, and we expect that to continue even with increase in capacities and imports looking set to continue for the next couple of years. So like I mentioned, with the new products, we will be able to compete with imports, and also with targets to expand the dealer network and the mix of value-added products. We will be able to compete with both the imports and domestic competition.
I'm a bit surprised here, and so is the rest of the street, that despite a sharp downtick in volumes in Q1, you're maintaining your guidance, which you also just talked about, 12 to 15% when it comes to MDF, plywood, you're expecting a 10% volume growth. What's the risk that you will not be able to meet that? Are you very confident of these numbers?
Yeah, we are fairly confident because, like I mentioned, the first quarter was a one-off because of the shutdown of the Rudapur plant. And now the plant is back on track and should be operating at normal capacities for the rest of the year. So we do not envisage any difficulties in achieving the guidance.
You talked about realizations and prices, so just wanted to understand the timber prices have gone up, I think 2% quarter on quarter. Are you looking at increasing that? And similarly, resin prices too have gone up. Are you expecting some sort of price hikes in Q2, Q3?
No, we have seen a fall in resin prices in the current quarter. So that will help to balance the cost increase on the timber side. So overall, we should not see any inflation in raw material costs. And at the moment, we are not looking at any increase in selling prices. We will basically leverage on the volumes to achieve the margins.
Okay, good to have you on board. Thanks very much. So continuing to hold their ground, they're sticking to their overall margin guidance. Q1 was a one-off because of a temporary closure in the plant.